The silver market and the copper market are focusing on China for the moment. Now, that may change on Friday, but the silver market and the copper market are focusing on China's policies. Are they going to weaken the yuan? Are they going to strengthen the yuan? And it would seem that no matter what happens when there's news out of China, these markets kind of pump up a little bit. If they're strengthening the yuan, well, then people are going to buy more silver and copper because there's better buying power. If they're going to weaken the yuan, then people buy more silver and copper because they're worried about debasement. So this is hot money in China right now. I wouldn't put too much into it. I would just focus on this. We had a big outside day, and even though we know what happened there, they're selling it because they need to buy gold. Just keep that in mind.
The price of gold has surged to $2,190, benefiting from a minor correction in the US dollar. This upward momentum is fueled by expectations of a June interest rate cut by Federal Reserve policymakers, supported by signs of inflation moving favorably. Near-term demand for gold remains bullish, with the 20-day Exponential Moving Average at $2,145 showing an upward trend. VinceLanci suggests that if gold doesn't experience a significant downward spike after a rally, it indicates sustained buying interest and the potential for further upward movement. Conversely, if the market consolidates within a specific range without notable bullish or bearish movements, it suggests a waiting period for new market information. According to J.P. Morgan, gold investments need to be better spent. Investors have been attracted by high cash interest rates, which present an intriguing opportunity. Assets that are under-owned and underappreciated often have the potential for appreciation. Their current outlook for gold by year-end 2024 ranges between $2,250 and $2,350. The price of silver opened at $24.73 per ounce, showing a negligible decrease of 0.02% compared to the previous day's price, while reflecting a 3.36% rise since the beginning of the year. According to the CFTC's Disaggregated Commitments of Traders report, the silver market has consistently increased its net bullish positioning for 3 consecutive weeks. It is now net long by 37,122 contracts, marking its highest since April 2022. However, despite the significant uptick in bullish speculative positioning, the silver market remains well below the levels witnessed in early 2020, when prices surged towards $30 an ounce. Lanci notes that silver is currently exhibiting behavior akin to copper, with particular attention paid to China's currency policies concerning the yuan. Developments in this regard can significantly impact silver and copper prices, with market responses contingent upon whether the yuan strengthens or weakens. Join us as we delve into insights shared by VinceLanci. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Let's talk about the charts. Let's talk about gold and silver. If you're looking for some guidance on how to perceive gold in the wake of this spike that we had, here's a simple, broad place to start. In a market that's well balanced, after you have a spike like this higher, you should, in a matter of days, have a similar spike lower. That means all the idiots that bought up here are selling down here, right? That's the not sophisticated money. If we don't have one of those down here, like overextended higher, overextended lower, well, then you know that there's buying here still, right? It was buying here all last week. If we don't have one of these, then there's buying here still. And if there's buying there still, then this is a market that has another leg higher. If, on the other hand, you have a little bit of a penetration here and then back in, well, you know that this is home for now. It's not bearish or bullish. It just is, and the market's waiting for the next piece of information. The bearish scenario, if it breaks this and persists for some period of time, I don't know, use your technical indicators, then this is vulnerable to a sell-off. Again, below here, I don't think there's a lot of buying in here. I think there's a lot of selling in here. So if it gets in here, I think there's going to be some selling. Silver is copper right now. Okay, it's kind of goofy, but that's how it is. And the reason I bring that up is because here we'll leave silver up. Let's squish it up a little bit so you can see more. The silver market and the copper market are focusing on China for the moment. Now that may change on Friday, but the silver market and the copper market are focusing on China's policies. Are they going to weaken the yuan? Are they going to strengthen the yuan? And it would seem that no matter what happens when there's news out of China, these markets kind of pump up a little bit. If they're strengthening the yuan, well, then people are going to buy more silver and copper because there's better buying power. If they're going to weaken the yuan, then people buy more silver and copper because they're worried about debasement. So this is hot money in China right now. I wouldn't put too much into it. I would just focus on this. We had a big outside day, and even though we know what happened there, they're selling it because they need to buy gold. Just keep that in mind. Of course, we could run back up in here again. Believe it or not, this thing could run up higher again. I'm not betting on it, but it's just something to keep in mind.
Lanci's observations regarding investors shifting from gold to Bitcoin raise pertinent questions. Contrary to assumptions, both assets have garnered investment from private individuals rather than witnessing a complete migration from one to the other. Research by JP Morgan indicates that despite the rapid growth of Bitcoin ETFs in the US, there has yet to be a substantial outflow from gold ETFs. While Bitcoin ETFs globally received a net inflow of $10.6 billion by March 14th, gold ETFs experienced outflows of $7.7 billion during the same period. This finding is supported by experts like Joe Cavatoni from the World Gold Council, Brian Armour from Morningstar, and Peter Sleep from Seven Investment Management. These experts highlight that the overall demand for gold is on the rise, fueled notably by central banks and traditional buyers in countries such as China and India. Although some investors perceive Bitcoin as digital gold, its impact on gold ETFs remains limited. Let's get back to the interview.
Let's read some excerpts and some comments from this very good JP Morgan report. Okay, the concern, year-to-date combination of outflows from gold ETFs and a surge in Bitcoin ETF inflows is raising questions about investors shifting from gold to Bitcoin. The reality, private investors and individuals have propagated both gold and Bitcoin year-to-date rather than shifting from the former to the latter. Comment, it's really split along demographics. You know, if you're over 50, you're buying gold and a little bit of Bitcoin. If you're under 40, you're buying Bitcoin and probably not very much gold. Anyway, JP Morgan said this ETF outflow trend does not reflect an aversion to gold by private investors, such as individuals and family offices, but rather an instrument shift away from physical gold ETFs to bars and coins. See, physical gold ETFs, just say ETFs, but they have to say that. All right, let's look at a couple charts that we marked up. Gold is being bought by retail central banks physically, not ETFs. Take a look at that. That's the outflow from ETFs, and that's the inflow from everything else. If you think about it, central banks are stackers, and they're starting to track what the grassroots has been doing for years. There's an observation for you. GLD liquidation trend has been ongoing for years. I think this is very telling. Blue line with the steep upslope, that's the Bitcoin funds coming in. And that has obviously ramped up with the advent of the Bitcoin ETFs. It's concurrent with an outflow from the GLD ETF. And so people will look at the last 6 months and say, oh, people are selling gold for Bitcoin. No, that's not true. The GLD ETF has been on a downslope since August of 2020, with a dead cat bounce in probably June of 22. Look, the GLD outflow has been for 4 years. Now, there are other reasons for that, and we've discussed that. And that's people coming out of the obvious one, people coming out of ETFs and going for physicality. So as the older and hopefully wiser of us know that if you don't have it in your hand, it's not yours. The older and less wiser of us seemingly are buying Bitcoin ETFs. So, you know, these people are not buying it for the reason that it should be bought. Bitcoin, that is. It's going to be a disaster if it comes off. Okay, reading on. Our conclusions. Private investors and individuals have propagated both gold and Bitcoin year to date rather than shifting from the former to the latter. And ETFs are not the drivers of price anymore, and therefore U.S. buying is not the sole driver of price. Thus, gold and silver are being definancialized and becoming recognized for what they are, real money and physical collateral that can be trusted in international trade, whereas the dollar is increasingly less trustworthy. The fiat experiment may not be dead yet, but it is on life support. That full analysis is at the bottom.
Considering the overall trends in the precious metals market and broader economic factors, what investment strategies do you look to diversify your portfolio and hedge against market volatility? Share your thoughts in the comments section. If the video resonates with you, Join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.